Hey, what's up guys? John here. 40 million homes. That's the number. 40 million homes in America they're saying is going to be at risk of essentially no home insurance, no property insurance, no mortgages. What's happening right now is insurance companies are just simply pulling out of markets that they deem risky, or they're just not profitable like they used to be, right? We're seeing insurance companies pulling out of a lot of markets. And what I think is likely going to happen here is I think it's going to change how people invest, where people live. I think everything is going to be changing very, very soon. And I think it's up to us. I think it's up to smart and savvy investors to pay attention to the trends, where people are moving, what's actually happening, so we can protect and provide for ourselves and our family. If you own property in this area, in this specific market, you should pay attention. You should probably speak with a mortgage adjuster or an insurance adjuster rather, and make sure that you're going to be okay the next 12 months, 24 months, 36 months. See if there's any trends, see if there's any problems coming to your market, because they're saying a third of America is going to be impacted by this. And I believe it. I really do believe a third of America is going to have this problem. So, because the CEO of Redfin came out about 7-8 months ago talking about this, that this is going to be a problem. And, Glenn Kelman knows, I think, what he's talking about. And I think that he has better information than we do. He led this warning before everyone else to kind of give everyone an indicator of what's likely going to happen. And this is, in fact, what is happening. Some 40 million U.S. homes are at risk from extreme weather in 2022. There's about 140 million homes, 130, 150 million homes in that range. This is about a third of all of America, right? A more extreme hurricane season than normal could inflict trillions of dollars of reconstruction costs in some 40 million homes, mostly in New York, Miami, and the Gulf Coast. So the Gulf Coast, if you don't know where that is, Florida, Alabama, Mississippi, Louisiana, Texas, right? This whole area is going to be in some big trouble. Texas specifically has a very unique thing coming to it, a problem coming to it, is that it's 35% of the entire economy is propped up by oil and gas, and that industry is going to be, I believe, decimated over the next 10 years. I think we're going to see more and more and more of those oil and gas jobs getting pulled out entirely, and as that does happen, we're going to see financial hardship plus insurance problems and potentially mortgage problems. Because if you can't get an insurance policy on your property, you're likely not going to be able to get financing on that property. Unless you're putting 60, 70% down, no lender is going to want to lend on a property that's not going to be insured, right? And so the only buyers that are going to step in and buy and invest in these properties will likely be buyers that are paying all cash, right? So that's greatly going to change the property values in specific markets, right? That we're seeing a lot of attention along the Sun Belt, which is in an area I think that's going to have less of a problem with insurance than some of these areas. So as many as 21 named storms, including hurricanes, could hit the nation this year. Property analysts from CoreLogic said it's in its annual report, citing a forecast for the June-November hurricane season from the National Oceanic and Atmospheric Administration. The report analyzed hurricane storm surge and wind risk exposure for single and multifamily residences along the Gulf Coast of Atlantic coast from Texas to Maine. This hurricane season could be particularly severe for the U.S. Gulf Coast due to warmer than average Atlantic Ocean temperatures, an ongoing La Nina, and a stronger than average loop current in the Gulf of Mexico, said CoreLogic. CoreLogic's damage estimates include a total estimate value of reconstruction costs, which takes into account the combined cost of construction materials, building equipment, and labor, while assuming complete destruction of the property. So basically, these are not going to be accurate numbers that they're going to feed to us, and they're going to have a net response to these inaccurate real estate numbers to where they can justify a radical move. Among the 15 metropolitan areas and states analyzed, the firm found that the New York Metro has a greater risk. Now, why would they do that? They would do that for a couple of reasons. One is that they do not want to assume any risk. Two, they want to be safer than sorry. And three, they're in the business to make money. So the higher that they project these problems, the more likely it is going to be that they're going to be increasing policies to drive more revenue to buffer themselves from any type of financial downside. About 900,000 homes are at risk of a storm surge and could cost about $433 billion to rebuild. High winds could damage more than 4 million homes. That will cost $2.2 trillion to rebuild. The Miami area ranks second, about 770,000 homes. They're at risk from storms that will cost $193 billion to rebuild. More than 2 million homes are at risk to damage from high wind and would cost $521 billion to rebuild. At the state level, Florida, Louisiana, and New York have the greatest number of at-risk homes with more than 3 million. Florida as a whole has about 9.5 million homes, right? Florida has 9.5 million housing units in Florida. Population about 21 million, right? And so we're talking a large block of Florida. Almost 911,000 and more than 600,000 homes at risk, or respectively. Texas had the highest number of homes at risk, 8.8 million, for incurring hurricane wind damage. So I think what we're going to be seeing here is we're going to be seeing a whole new real estate market unfold in the next, year or two. And I think this is going to be very fascinating, very interesting for everybody. Whether you're planning on investing in real estate or you're planning on simply maybe selling a property or refinancing a property or making some type of move, this is going to change, I think, everything. I think it's going to change where people are moving. I think it's going to change a lot. What do you think about this? Where do you see the housing market going? Do you think we're going to have real insurance problems? I believe that this is in the cards. I think that it's very fascinating how insurance companies, in many regards, they'll essentially set the value of a property in many respects. And how so? Is if the rates are low, then that's one thing that's going to impact a buyer's debt-to-income ratio on qualifying for the property. But if rates start skyrocketing after they've already purchased the property, then these new rates will essentially change the debt-to-income ratio of the buyer, of the homeowner, to what they can afford on their property. And so if they don't have the money to come out and pay all cash and their insurance is getting canceled, what's ultimately going to happen is we're going to see a situation where either lenders are going to self-insure that property and they're going to charge their increased rate, or something else. So what do you think about this entire situation? Where do you see the housing market going? And this is happening now. It's fascinating just how quickly things are moving. Things are moving very, very fast. I think Florida is one of the most overvalued real estate markets because people aren't taking into consideration where these rates are actually headed. These rates are headed only one way, and that's up. Drop your comments below. Let's talk about it. Subscribe here. Also subscribe to my second channel. It's going to be an interactive call-in show, a podcast this upcoming week. I'm really looking forward to that. Subscribe here. Also subscribe on that second channel. And LinkedIn, Twitter, TikTok, Instagram, everything is in the banner. If you need help establishing a strong credit score, you have maybe some issues on your score, my team is absolutely incredible. Cashnow.video. That's cashnow.video. If you want to get started on YouTube, get on the YouTube grind with me. Cashnow.video. And if you want to invest in real estate, when things hit the fan, you want to make sure you buy the right deal, cashnow.video. All right, I'll see you guys in the next one. If you're interested in being sponsored on my YouTube channel, visit cashnow.video/sponsor and fill out the application.